Hey, what's going on, guys? Welcome back to the Money Way, and today we're going to be talking about should you be investing in MGM Resorts. So I actually have a stock analysis video on this stock on my channel right now. So if you guys want to look at the different products, services, revenue streams that this company has to offer, go ahead and check out that video first. This video is just to go over like how it's doing right now and how it compares to something like Caesars Entertainment, which was the merger between Caesars and of course Eldorado Resorts. I have a video on that stock too, which I think is the best resort stock to buy right now. But anyways, MGM Resorts went up 15% the past week and about 10% today. So you might be thinking, wow, they must have done really good on earnings. They must have been, very profitable. They must have been driving in a whole lot of revenue. But when you actually go into the earnings, they were not profitable, like at all. Their actual was $1.52 in the negative per share. The only reason why they went up is the estimated loss per share for this earnings report was said to be minus $1.72. That's what it was estimated at. But this time it was at $1.52 loss. So of course investors are going to play over that and the stock is going to go up. We've seen this happen many times. It's not a surprising thing, but a lot of people are going to see, oh, this stock must be doing good. Oh, I heard earnings are coming out this week. MGM must have had very good earnings. No, they did not have really good earnings at all. They have a very low dividend, especially when you compare it to some other resort stocks that actually have a bit higher dividend yield. And the amount of properties they have is actually a lot less. It's about half when you compare it to some things like ticker symbol CZR, which is Caesars Entertainment, which is of course my favorite resort stock right now. I actually sold completely out of MGM Resorts because not only are they very unprofitable, they're really in the negative as shown from this earnings report. They were on a pretty steep downtrend ever since Q4 of 2019. It's just been going downhill, and they were negative pretty much every single time, which is not good for an investor, especially because it would take a lot of revenue, it would take a lot of profit, it would take a lot of people going inside the properties in order to recover from a position like this. It's going to take a very long time, and when you look at the actual return that you could get from the stock price going back to its original value, it's not even a 2x right now. So it's not even, looking that good as a value stock for value investing, which is what I'm trying to do. So Caesars Entertainment on the other half, I believe the top before Corona was about $72. $75, something around that, and right now you can actually buy it for $37. So it's actually still a 2x, and not only that, but they actually have double the amount of properties across the United States and even across the world when you compare it to something like MGM Resorts, which actually only has 30 and Caesars Entertainment has 60. Caesars Entertainment also has a sports section. They have their own sport teams, basketball, whatever it may be, and so that is very entertaining. I also went and actually watched one of these games happen live from Caesars Entertainment Sports. I went to one of their casinos before, I went to the resorts before, and I'm not gonna lie, they're pretty good, but that shouldn't sway your decision as an investor, because of course MGM is gonna have good resorts. Of course MGM is gonna have good casinos. It's what they do, right? But when you look at the actual profitability of the company, when you look at how many different revenue streams they have, how many different products, how many different companies they're pairing up with, the analyst ratings that they have, because analyst ratings is what drives the stock. I believe we saw that with NIO, and it was Goldman Sachs that dropped their buy rating to a sell rating, and the stock actually dropped, I believe it was 10% in one day. So analyst ratings are doing very bad. Earnings report, horrible. The amount of properties they have, a lot less. The amount of companies they're teaming up with, a lot less. The amount of revenue streams they have, a lot less. Dividends, very, very bad, right? And so you guys always want to look at the different things, not just what's right in front of you, not just what's on the Robinhood page, not just what's on the E-Trade page, not so what's on, God forbid, the Stash page. But you guys really want to make, an educated investment with all the possible sources that you could possibly come up with, because there's a lot of information out there that you can get on these companies. You have balance sheets, you have their own website, you have news, you have articles, you have all these different things that you can get the maximum amount of information on these companies. But anyways, if you guys learned anything today, please go ahead and like, subscribe, please, and hit the notification bell so you don't miss my next video. Also, let me know down in the comment section what you guys think of this stock right now. Thank you guys so much for watching and have a great day.